And you're good.
Okay, let's finish up talking about soybean markets. Strong soybean meal markets. So one thing that happened in the supply demand balance sheet was the USDA did that was positive for soybeans was that they raised the crush, and so you've got happening worries about kind of on and off stories about how COVID-19 has been affecting the flow of crops to the ports in Argentina, and they've also got government tax issues. You know, they have a city versus country thing going on that affects them. So one of the big what does Argentina export ag products. So they tax hard beans, and there's more of a loophole, I guess, or less taxation on soybean meal because they process it in country, they employ people. So people follow their incentives. Some reduction in 2020 Brazil crop size from late season dryness. The Brazilian president has said, basically, I saw this article about, it was last week, saying that he wasn't going to, where although his governors, the people lower, state level of government, they were doing mitigation on the coronavirus. He came out with a statement, basically said that Brazilians have a lot of immunity. We're just going to let it work out. They're going to go for the herd control thing, and herd immunity. And there's some merit to considering that, but wow, it just seems like they're leaving themselves vulnerable, and that from our perspective, there's some vulnerability there. If they're just going to have it come and get it over with. Well, we may look back and wonder if we should have done that too, except for our healthcare system. The point is, the coronavirus story may not have all been played out in South America, particularly in Brazil. And if they get disrupted and can't supply beans, right now this is their harvest season. This is when they got a bunch of it. But if they have disruptions, then that sends business back to the U.S. Even with our high dollar, if we can maintain our logistics system and keep our grains coming to ports, you'll have an inelastic demand. It'll be good for these markets. So we'll see how it goes. 2020 U.S. planting prospects. 83.5 million acres planted, projected by the USDA. Was too high before. Yeah, what I was talking about was the expectations coming in. Adjusted post-report expectations, 84 to 87 million acres. So the market, in their thinking, is thinking that all those 97 million acres won't get planted to corn, and some proportion of them, 2 or 3 million acres, will come back and go into soybeans. We'll see. Estimate 2020 production ending stocks if we don't have a crop problem this summer. Soybean production, 4.4 billion bushels, back to where we were 2 or 3 years ago. Ending stocks though knocked down some, 300 to 450 million bushels, 7 to 10% stocks. That shouldn't say corn, that should say soybeans. That Alicia, that's what you get when you work from home instead of in your office. So, anyway, see, U.S. season average soybeans, USDA's projected 880, and so 880, 850 thereabouts. That looks like somewhere in the mode for me. And again, the caveat: if South America avoids major COVID-19 disruptions as our main competitor with soybeans, then we'll have a moderate, up and down type of a year, no excitement. If they have major disruptions, that's a wild card that could, at least for periods of time, help the U.S. help. You're not wishing any problems on anybody, but it's something that could help our markets. Here's a soybean supply demand sheet, came out yesterday. Again, you see crush up 20 million. You see that crush line go across 18-19 marketing year, 2.092 billion, 2.125 to 1920, raised that 20. They fiddled on the edges, took down seed residual, and when they don't know how to balance things out. Seed and residual is sometimes the victim. Exports, they dropped the export projection down 50 million bushels. Well, sizable crop, South America. We shall see, but we just talked about, hey, you know, that's not a sure thing. With all that working out, ending stocks up 55, stocks to use 12%, up some, and all that changing around. U.S. Average market price 865, and you can see soybeans have had their low time, but it had jumped up higher again, fell back down. They're stumbling around, trying to figure out where to go. Basis, you know, we showed you that grain sorghum basis bid. Hutchinson, Cargill, export-oriented place. You know, there's that is. So we've seen the soybean basis detach itself from where it had been the last 3 years. So this is not a sign of weakness in the market. It's a sign of some movement anticipated. And you can see so even with all that, here you've got terminal bids. Atchison 844, highest price in eastern and central Kansas. Out to the west, pardon me. The higher bids are at the processors, Emporia and Wichita, 851, 858. So, you know, we've got soybean processing demands, and they're trying to pull that in, and they're making money selling beans in soybean meal form, and you see it in their prices and their basis bids. And out to the west again, transportation, distance from the processors back in the east, and you just, you know, there's some basis bids there over $1. And to finish up then, key soybean supply demand issues for exports. Bearish short term 13.3. The thing to remember about beans is South America is having their harvest right now, and they've had this late season drought from the southern areas. It'll chop their amount down some, but total shipments, there's 67% of the USDA's new projection at about 60% of the year complete. So that's quote neutral to positive. Total sales, 60% of the marketing year completes, about 77% of the way there. So that's positive. And you know, when I see those basis bids, and I see that percent sale ahead, that it makes it, these major terminals, probably their motivation would be something along the lines of these forward sales to be in position to meet it. It seems that way to me. That's how I intuitively understand it. And then soybean meal exports bullish. Export shipments for the week ending April 2nd, 273. 273 100 metric tons for the week. Total shipments through April 2nd, 6.2 million metric tons. That's half the way to the USDA's projection of 12.2, with about just a little over about 52%. So 51% of the way to the USDA's projection of 52% of the way through the marketing year, and you're running a little bit ahead on the forward shipments and sales. So so there you go. I go back, if I can, I'll go back to the very beginning, put those prices up there. So those are the markets where we had, and Alicia, I'd take a look at the futures, but I'd mess up my screen to see where we're at. So when a whole bunch of pessimism going on, and we had wheat freeze worries, some things happening on the soybean futures, and grain sorghum looking decent. Really, corn's the struggling one right now. And if you ask me on marketing strategies and particular ones, I'll sure address those with my best effort. Makes it tough to figure out what to do with corn if you have old crop corn right now. But Alicia, before we go into that, why don't we stop the tape? Stop the tape right there, and that'll keep the soybean section decent time, and then we can go into questions.
Okay, well, let me stop the recording.